Q2 meets, it's a good quarter, but the Q3 guidance is disappointing. Let's get in an expert. Sarabjit Kaur Nangra of Angel Broking joins in. Hi Sarabjit, what have you made of the Q3 guidance? 1841 to $1878 million.
Yeah, looks on the lower side, but let's see what's gone into those guidance numbers actually. But yeah, private basic looks on the lower side.
Okay, so now you've got two aspects to this. One, the Q2 numbers look in line with consensus expectations, but on the flip side, you've got a Q3 guidance, which you said seems a bit disappointing, though you're awaiting final details. Which one should the street focus on more? Would it be the Q3 guidance?
Definitely, I guess so, because the way the IT companies are declaring numbers, I guess it's a future which is becoming more prominent, and the outlook going forward, which is I think it's more important.
Okay, so do you expect the stock to fall tomorrow?
Yeah, there could be some knee-jerk reaction actually, but I think it's too early. I need to understand as to what are the factors gone into behind that guidance actually.
If you had to estimate or guess what the factors could be behind this guidance, what could it be? Because typically Wipro does well in this quarter, in the coming quarter.
Yeah, so that's what I said. So need to understand. I don't know whether it's a domain-specific issue that they're facing, which or a client-specific that such a low guidance has come through.
But does it matter what the reason could be? Net, you still have a company which is not going to be delivering a strong growth in the coming quarter and will be delivering once again for another year a much below industry growth. So does it matter what the reason could be? Maybe it's energy, maybe it's healthcare, maybe it's one of their top clients which didn't do so well. But how much does that internal matter in light of the fact that the Q3 guidance per se is disappointing?
No, it matters in the sense that whether it's temporary, as Tech Mahindra had pointed out that they are facing in some of the domain, even HCL mentioned. So to that extent, it definitely matters. But yeah, Wipro, since it's been a company in IT which has been not so constant as compared to other companies, need to deliver on a sequentially, strong numbers, maintain its profitability, and also give an outlook which is very robust. So I guess to that extent, yeah, it does matter.
Yes, I know the internals matter, but I was just looking at it, from the broader picture since we're awaiting details. Let me give you some more details. No client additions in $100 or $75 million. In the $50 million bracket, the client adds have gone up from 30 to 31%. In terms of the utilization, the gross utilization has declined. So 71.3% has come down to 69.5%. And though the net utilization excluding trainees has gone up by 40 basis points, so 82.3 versus 81.9. So that's one factor. With respect to the attrition, the voluntary quarterly annualized attrition has gone up, so 16.8 versus 16.4. So that's one more detail. Talking about the individual verticals, which has energy has done badly. So energy is actually declined by 1.4% for the company, and that is an important vertical. It contributes close to about 15% to its overall revenues. So energy has been one problem pocket. Apart from that, Europe has not given any growth. So the performance of Europe has been absolutely 0.7% in this quarter. So that's been below the company average, and it's important because even in the previous quarter, Europe is down 1.9%. So this is another quarter where Europe has not done well. So these are a few areas. Energy is down 1.4% in dollar terms. In constant currency terms, it's just a 0.3% growth, but it's at odds compared to what the management had told us when they last time told us that energy perhaps has bottomed out. Europe is done weak is weak for the second quarter in a row. And in individual practices, it's the application services business which has not done too much. So that is just a growth of about 0.7%. That apart, global infrastructure services has seen a growth of only 1.8%, and that seems to be growing slightly slower than what the company has been growing. Consulting has rebounded. Consulting in the previous quarter was down 4.5%, but this quarter it's bounced back with a 13.8% growth. So net to tell you the problem areas, it's energy, which has declined. Europe has grown lower than the company average for another quarter in a row. In individual practices or service lines, application services has been weak even as consulting has bounced back. The other internal that we were looking at very closely was the performance of the top client, because that was under pressure in the previous quarter, and even this quarter the top client, actually there has been some issue, because if you see the top client percentage of a revenue is 3.1% versus 3.3%, so that too is a bit subdued. Let me get in Prakash Diwan to talk more about Wipro. Hi Prakash, your initial thoughts. We've seen a lot of the internals.
Yep, so nothing very disappointing, really speaking. But
you're not disappointed by the guidance?
The guidance is the only one which is saying. So from the numbers that have come through, it seems as if it was just a normal quarter. But I guess Wipro's got this inherent stress that's still not kind of getting resolved. And ever since they bifurcated themselves into a lot of these subsidiaries and businesses, we thought they would take a year or two to get that in order, but it's not. But where they've scored possibly is that they've nudged through that dollar revenue this time around, and which is kind of more the line in expectations. But going forward, the verticals that they have been focused onto are going to drag them down. I don't see any respite in oil and gas or in BFSI for that matter. So look at the other players. They've got a much more diversified product mix, revenue stream, and I don't think Wipro can scale up consulting, which would otherwise have been a savior. So I can understand the stress that's there, and the stock could kind of get slightly out of favor from most people's basket, but it possibly needs to do something very different to bounce back. Otherwise, it's just an ordinary pedestrian set of expectation that will build in the subsequent quarters.
But that's been the case with Wipro, right? 2 good quarters, 1 bad quarter, yeah. 2 good quarters, 1 bad quarter. We haven't seen sustained strong industry in line with the industry growth averages. And the management in the past used to tell us, we're going to come back to the industry growth average in Q3
so
of this year.
Lot of building
and
of
that
expectations.
kept getting advanced, the timeline.
Yeah, so you're so right. The management always promised that these changes that they're making will kind of set a new path and herald a new beginning of sorts. But somewhere they've just been kicking the can down the road, really not much in terms of veritable change. People don't look at Wipro with the same conviction, same respect that they possibly do with the top 2 players, and that's exactly why number 3 and number 4 as slots have been vacant for so long that HCL Tech, in spite of issues of its own, finds itself come in very easily. So I guess Wipro is very clearly going to continue being 5, 6 wherever on the pecking order, and there's no way it can come back.
Okay, so 2 questions. If someone already holds the shares of Wipro, what should they do? And B, if the stock falls a bit tomorrow, would you recommend fresh buying in it?
No, I really wouldn't buy it, that's for sure. But for somebody who's holding and is in the money, you could probably book profits quickly and move into something like Infosys, or even for that matter HCL Tech. I don't see any issue with HCL Tech. The bad part seems to be priced in, and there could be a phenomenal growth going forward. And this Volvo acquisition obviously is something which is really a marquee thing to have, and that will pay off very well in times to come.
Okay, so HCL Tech looks better than Wipro. What could explain this Q3 guidance according to you?
I think their inability to grow the top client business from the top clients in terms of focus. The way Infosys is done, with the CEO himself focusing on the top clients, massaging those relationships into very lucrative margin levels. That's not happening with Wipro. So it's slipping out of their hands, and the verticals that they are present in, it's difficult to kind of make inroads into different smaller verticals which are already serviced by large players. So you could be the 4th or the 5th player there, and you get some residual business coming your way. So I think they've realized that they need to reinvent themselves and sincerely reinvent themselves, not just talk about it, to really come back. And that guidance very clearly reflects the lack of conviction that the management has on improvement in numbers on an immediate basis.
Okay, one question. Wipro always delivers within the company's guided band, at least for the last many quarters.
Yeah.
At least somewhere, realistically, it's somewhere in the middle of the company's guided band. Now, the Q3 guidance stands at 0.5 to 2.5%, which, going by the past track record, you would say that maybe Wipro will deliver a 1.5% growth in Q3. Now, considering it's seasonally weak, considering the kind of commentary that we've got from peers, now Infosys, for instance, if they just meet their guidance, they're going to be delivering a flat growth in Q3. So then would a 1.5% growth that Wipro hypothetically will deliver not look better compared to what its peers? Are we reading too much into this weak Q3 guidance then?
No, I'll tell you where people where things kind of get spooked. A guidance which is not so impressive in an environment where others have started showing the first signs of confidence coming back is not very well timed. That's the only part. So if Wipro were to do that and Wipro were to continue
doing, they have delivered in Q2, right?
They have, but so you're not seeing a continuation of that. Suddenly, so what the management is saying, hey, what, we've reached here very well, as expected, but now we're putting the brakes on our momentum. So nobody wants to know, nobody knows how long that brakes are going to be. Is it only 1 quarter? Is it 2 quarters? So the damage control, from a damage control perspective, people move out and try and be in something which is more visibly, clearly growing, maybe at a tad lower, but there's more visibility in growth in some of the other players.
So currently the stock is at 577. Where do you think would be support for Wipro? At what point does it turn attractive? Because valuations are not very high.
Exactly, that's what I was thinking. So it's not going to get punished severely as well, because it's not over-owned, So largely speaking, there are not too many high expectations that you would see a sudden reversal of sorts. So my guess is it probably lose shed a little bit of weight and maybe consolidate at that 555, 550 zone for the immediate basis, and then people will read into the numbers a bit more, wait for all other numbers to come through, and then a relative strength or weakness could kind of decide the next course of action. But 550 would be the first port of call for sure.
Okay, Prakash, thanks so much for taking us through Wipro's earnings, and we'll thank Sarabjit as well on that note. So to summarize Wipro's Q2 performance, Q2 has delivered in line with street expectations, a dollar revenue growth of 2.1%, a constant currency growth of 3.1%. They've delivered margins of 20.7%, a slight decline of 30 basis points QOQ, but that was anticipated by the street. There's few problem areas for the company in this quarter appears to be Europe, which has not done so well. Energy has seen a bit of a decline, and the application services segment has also not clocked in very strong growth. What's done well for them is healthcare. That was something the company had promised us, because in the previous quarter they'd faced some issues there. So healthcare has done fairly well. Media, global media and telecom, a smaller sector, but that seems to have done quite well. Finance solution has grown in line with the company averages. So energy is weak, but most of the other sectors have done fairly well. In terms of geographies, Europe is subpar, but America continues to drive growth. And in terms of individual practices, consulting has clocked in a double-digit revenue growth, so that's bounced back from the weakness in the previous quarter. But while Q2 internals you could mull over, some did well, some did badly, what will disappoint the street will be the Q3 guidance, which stands at 0.5% to 2.5%, and this is lower than what the street was anticipating. So Q3 guidance is subpar. The only caveat that I'd like to add is that a lot of IT companies have, a few of the IT companies had hinted at a diminished or subdued outlook for the December quarter. So should we see the Q3 guidance in light of that, or should we see it on a standalone basis compared to expectations? Because if we see it compared to what the analysts were expecting, it seems a bit disappointing. But then should we compare it to the demand commentary that's been coming in for the December quarter, which doesn't seem to be as great as what the street was earlier anticipating. So Q2 meets, but Q3 guidance disappoints. Nayantara, it's back to you on that.
Certainly going to be a stop to watch out for on Friday when the Dalal Street resumes for trading. Thanks, Alrima, for joining us with that analysis. That's the Wipro performance for you. With that, time for a short commercial break. We haven't taken one in a long time, but stay tuned. Plenty of news and updates when we return.